Hello friends, this is Kirti Sektya and I'll be taking up the topic of cost sheet today. Now, what is a cost sheet? What are the objectives of preparing a cost sheet? First of all, it is a statement of cost. It is a statement in which we put in all types of cost to find out the total cost. It is a measure of cost control. Now, what do we mean by a measure of cost control? That is, it helps in the reduction of cost. Third, it helps in the fixation of selling price. When we find out the total cost, to that we add the profit margin to get the selling price. The last one, it facilitates in managerial decision making. Now, when we get the total breakup of cost in the statement of cost, so we know where we are incurring higher cost. That will help in cost control. So it also helps in the managers to take decisions in order to reduce the cost. When we talk about the actual definition, see, cost sheet is a statement designed to show the output of a particular accounting period along with the breakup of cost. Now, if we look into the small elements of the definition, first of all, statement. I just now had told you that it is a statement of cost designed to show the output of a particular accounting period. Output, here we find out the cost for the output. What is output? It is a total number of units produced during an accounting period. Now, what is accounting period? It is the period for which we are preparing the cost sheet. It may be a period of 1 year, a period of 6 months, or maybe quarterly as per the requirements, along with the breakup of cost. Now, what do we mean by that, along with the breakup of cost? Here, when we prepare the cost sheet, we find out the cost and at each and every level. So, now the next point, it provides information relating to the cost per unit at the different stages of the total cost of production. That means, as I had just now told you, that it gives us the breakup of the cost and we find out the cost for the output. When we divide that total cost by the output, we get the cost per unit. Now, the next topic, components of cost. There are 4 components of cost here: prime cost, works cost or factory cost, cost of production, and total cost or cost of sales. The first one, prime cost. What is prime cost? Is the sum total of all the direct expenditures, that is direct material, direct labor, and direct expenses. The next one is factory or the works cost. We just now found out the prime cost. To that prime cost, when we add the factory expenses, we adjust the opening stock of WIP and the closing stock of WIP. The resultant answer is factory cost. Now, what is WIP? WIP is nothing but the work in progress. The next one is cost of production. The factory cost, which we had just now found out, to that when we add the office and admin expenses, we get the cost of production. To this to this cost of production, when we add the selling and distribution overheads, what we get is known as total cost. Now, when we were studying the prime cost just now, we saw the concept of direct materials. Now, what is direct materials? It is nothing but the raw materials consumed, right? So, how do I find out that? It's a simple formula to that. Opening stock of raw materials. To that, we add the purchases of raw materials, and again to that, we add the expenses incurred in purchasing of raw materials, as in carriage inward and etc. To this, we adjust deduct the closing stock of raw materials, and what we get is known as raw materials consumed. Then now we come down to the indirect expenditures. There are 3 indirect expenditures which we consider in cost sheet, which is factory expenses, office and admin expenses, and selling and distribution expenses. The first one, factory. Any cost, any indirect expenditure which is incurred in the factory premises. Cost in indirect material, indirect labor, and indirect expenses. The next one is office and admin. So, how do I define that? It is any indirect expenditures incurred in the office premises, example, salaries of office staff, rent of office premises, stationery, etc., etc. The last one, selling and distribution expenses. So, here we have 2 components, selling expenses and distribution expenses. Anything which we incur to make the goods ready for sale is known as selling expenses. Anything which we incur to distribute the goods for the purpose of selling is known as distribution expenses. So here we combine both of them. Example, delivery van expenses, depreciation on delivery vans, salesman commission, packing charges, advertising, etc. etc. Now here comes the pro forma of the cost sheet. Here we see the title, cost sheet of, it is the name of the concern for which we are preparing the cost sheet, and for the year ended, that means the counting period for which we are preparing. The first concept which here comes in is direct material, that is raw material consumed. How do I find that out? Direct material purchases plus opening stock of raw material minus closing stock of raw material results in material consumed. To this we get the direct wage, we add the direct wages and the direct expenses to get the prime cost. To this we add the works or the factory overheads and adjust the opening stock of WIP and closing stock of WIP to get the works cost. To this we add the office and admin overheads to get the cost of production, also known as COP. To this we adjust the opening and the closing stock of finished goods to get the cost of goods sold, also known as COGS. Now try to differentiate between COP and COGS. COP is the cost of the output, whereas COGS is the cost of the goods which we are able to sell it off. What is output? Output is nothing but the number of units sold. Let's take an example. Output is nothing but the number of units produced. So let's take an example. Suppose we are producing 1000 units and out of that we are able to sell off 800 units. So this cost of production, that is COP, is found out for those 1000 units, and when we adjust this closing stock of 200 units, we get the cost of goods sold, that is the cost for 800 units. To that we add the selling and distribution overheads to get the cost of sales. To that we add the profit margin to get the selling price. So that's it with the concept of cost sheet, and thank you.